earn more money but too busy to start a side hustle? Do it the right way and teach your money to make more money for yourself, even when you're asleep. Dale Corpus will show you just how here on the School of Cash Flow. With his entrepreneurial mindset and extensive experience in real estate and finance, Dale will help you become a responsible, strategic, and passionate passive real estate investor. Learn how you can increase your earnings or find more ways to make money, only here on the School of Cash Flow.
Good morning, everyone, and welcome to the School of Cash Flow podcast. I'm the host, Dale Corpus. So it's really not uncommon for people to tell me that they don't have any time to invest in real estate. But what they may or may not know is that there are different ways to invest in real estate. Some ways of investing in real estate may take more time than others. For example, flipping and rehabbing homes is more on the active side. And it takes up more time, but there are definitely other ways to invest, as we've covered on previous episodes. We've had many folks as guests that invest passively through syndications, through joint ventures, or other similar models. And it's really more about finding what fits your goals and what you want to achieve. I mean, if you know you're committed to investing in real estate, you will figure out a way. My guest today found that commitment to invest in real estate. He's doing it. In fact, I'm so excited to hear more of his story. He's a full-time medical physician, among many other things, and he's been able to grow his real estate portfolio. His name is Harry Nima Zegarra, and here's a little bit more about Harry as well. Harry is a pulmonary and critical care medicine physician, a real estate investor, entrepreneur, co-founder, and manager of Nima Equity LLC, which is a commercial real estate syndication company where he helps physicians to earn passive income, lower their taxes, and achieve financial freedom. He has experience in rental properties and currently owns and manages 9 properties across the Dallas-Fort Worth metro area. He's a general partner in 784 units in 4 different states. And he met his wife, Mitzi, in medical school in Peru, and they finished their training in Pennsylvania and Virginia. And he currently works at a tertiary medical center in Dallas, Texas. And Harry and Mitzi, they love the outdoors. They have 2 boys who love playing basketball and soccer, and they love to vacation to Cancun in Florida, enjoy time at the beach, Disney or Legoland. He's also an avid runner. So without further ado, let's get started. Harry, how are you?
Hey Dale, how are you? I'm really good. I'm really good. Thank you for having me here on your show today.
Oh, absolutely. You know, it's like I just reading your bio and whatnot. It's like we have a lot of things in common. I mean, for example, I have 2 boys. I'm curious, what are the ages of your boys?
Yeah. They're 2 boys. They're 6 and 10 years old.
Okay.
And they go to the same school and they play together. They fight together. They actually play the same sports too, like soccer and basketball. So it's really fun.
Yeah, we have kids of similar ages. Mine are just 1 year older than both of yours. I have 2 boys, 7 and 11.
Oh, okay.
Yeah, so
that's great.
Yeah, they're both in scouting. They do swimming, and like I take them to Disneyland and Legoland as well. So
okay.
So I take it geographically, you're based in Texas, correct?
Yeah, that's correct. I'm in Dallas, Texas.
Real estate's all about connections and, as you know, and relationships. And I know that we met through our common friend who was actually a past guest of mine on my show, Todd Soldinger. So like, just so that my audience knows, like, how are you? How did you even know Todd? That's how we got connected.
Yes, exactly. Yeah. So we knew each other like already for some time. Like we're part of an investing group, like which is called like the Good Egg Investment, which is a group like that we work together with other sponsors, and just mainly focuses actually like on capital raising and marketing. But there are like all types of sponsors, from new to seasoned sponsors, have been here like from 1 year to 10 years or more even.
No, that's amazing. You know what? I know it's like obviously you're a physician now, and you got into real estate not too long ago. I just want to understand, you know, how that all happened. Like how'd you get in real estate, or how did the evolution of this all go about?
Yeah, I mean, it goes back actually when we were back in Peru. So as you know, like my wife and I are physicians, and we actually both went to the same medical school, and we were in the same class. My parents early they got divorced, and so I was raised by my mom, and she didn't go to college, so she didn't have like a different like small ventures and businesses, and one of them was real estate. So she owned like a small hotel, and also she bought like two small apartment units. So I was able to see, I mean, like of course her hard work, but also I was able to witness how real estate helped her to through life, and to raise my sister and I, and to put us to medical school, and even she was able to help me to some degree to come here to the US. So we were exposed very early in life. And then like when we came here to the US, you can imagine, like because of the nature of our training, my wife and I were training and working like in different states, right? Like initially, as I mentioned, we were in Pennsylvania doing my residency, my wife too. And then like when I applied to pulmonary and critical care, we moved to Virginia. Just before we moved to Virginia, it was 2011, and we were about to move there, and we decided that we didn't want to rent; that we wanted to become homeowners. And as you can imagine, it was 2011. It was like still like it was not a stable market in real estate, and there was a lot of foreclosures and short sales. To be honest, I haven't heard the word short sale, or I didn't know like the meaning of short sale at that time. And it was like a very interesting experience. Actually, we started the process about like 3 months before we moved to Virginia. And you have all the experience, and you know that short sales sometimes take like a long time. And we were kind of stressed out and all of that, but we were actually able to close probably 3 to 4 days before my training start in Virginia. So it was like exciting, stressful to some degree, but yeah, we were able to buy that small townhouse through short sale. And then like after a couple of years, we were moving to Texas after my training to start practice initially in private practice. And we decided to sell that townhouse, and we found we were nicely impressed that, I mean, like the townhouse had appreciated like a good amount actually. So we sold that townhouse, and we moved to Texas, to South Texas initially, again, as I was in private practice. Initially in South Texas, we were also considering staying. So we bought like a piece of land in South Texas, and we were kind of wondering and maybe having plans about like building a house in there. But at the end, we didn't stay in South Texas. We finally moved to Dallas, where my wife had some family, and also we had friends in common. And we also decided to sell that piece of land, and also had appreciated in just like a matter of probably even less than a year. So we were very prime when we came here to Dallas, right? Like, so we love the area. Like our kids love their school, and it was clear to us that we wanted to really be involved in real estate when we came here to Dallas.
Okay, so when you moved to Dallas, what other types of investing that you do? So like you sold your first townhome out of state. You bought the piece of land over in South Texas. And so what did you like when you knew that you're focusing on real estate investing? What kind of property types were you delving into at that point?
Yeah, so like initially, I mean, our education probably started like when we were about to sell the piece of land, like there, like in South Texas. I mean, until now we were just with the mentality of a consumer, right? Like so we don't want to spend in rent. I mean, we just want to save. We were not having the mentality of investment or investing or looking at the future, right? Like like we're physicians. We spend like a lot of time like in classrooms. We spend many years in medical school. So, but unfortunately, we don't necessarily have good financial education there, right? So we're finishing that, and again, we were moving here. We were just thinking about just saving money and not to have to spend like in renting. So, but yeah, so it worked very well. And just before coming to Dallas, we started like doing more education about it, like you know, the classic, like the bigger pockets, the white coat investor for physicians, and they were all talking about, like, again, like all the benefits like that real estate brings, including in taxes. So that's what we decided. So we came to Dallas almost immediately. We knew that we loved the area. We wanted to settle. We bought our first home like about 6 months later, and just after that, we started investing in real estate. Initially in residential real estate, we started buying like small single family houses in the Dallas Fort Worth area, and again, in the last year and a half, we have transitioned a little bit more to commercial real estate, more like in the apartment complex syndication model.
Okay, got it. So you switched over to multifamily at that point. You know, for folks knowing that, you know, you're a doctor, a medical physician and whatnot, you're a high income earner, obviously, and whatnot. I mean, it's like people would think that you like, why are you even considering real estate? I mean, was it, I'm just curious, is it, you know, like people think that you probably have it all and whatnot. It's just like, and so why were you like, was it something that you did you see it as is it something that you wanted to build while growing like a medical practice or whatnot, or what do you see real estate for you in the long run? Is it going to be something that's just, you know, going to replace your job, or maybe you still like your job? I'm not sure. Yeah.
Yes. So we saw this as an alternative for income, right? Like, so you know that we are physicians in general. We're believed to be very successful, and we are very good earners. But at the same time, like we are taxed the highest, right? Like, and one of the things, realities in life is it's not much how you make; it's also what you take at the end to you, right? And also, being a physician, you don't always have freedom in terms of your time, in terms of your hours. Lately, especially because of the pandemic, we found out to some degree how vulnerable we are. If we depend on just one income stream, right? If something would have happened to me, and you can understand, my wife is a family medicine doctor. I'm a critical care doctor. We were in the front lines actually in 2020 when everything started, like even before there was any specific treatments or like the vaccine or anything like that. So if someone would have happened to me or to her, I mean, that was it, like in terms of our income, right? Like, so to some degree, that's scary, like for anyone who has like a profession and who doesn't have like a backup plan or other source of income. So that's when that's when we decided to start investigating and educating ourselves about these other assets, right, or investments.
Got it. So was it because of that, because of the fact that you were on the front line during COVID, that you just started thinking about like this as another source of, you know, a vile way of making another income? Is that correct?
Yes. So I mean, like, we had started like a little bit earlier, but that actually really put us everything in perspective, and we said, yeah, we definitely need like to continue doing this. Yes.
Okay. So like, how did you make the transition where you started, like, because you started bringing on partners, and it sounds like you also have your own syndications now too. So it's like, how did that evolve? So at what point did you start using other people's money?
Yes. So initially, we started with single family houses, right? Like with the and we became landlords. Actually, like our first home, like the first home we bought, like we actually were self-managing, and you can imagine, like, two physicians with full-time jobs and two small kids, like very active kids. It was not a good idea. We found that very quickly. I mean, actually, after 3 months, we had owned the property, like the AC broke, right? Like, so, I mean, like, we're saying, like, what have we done? I mean, it has been like the worst investment we have ever done. I mean, on all the cash flow in the first 6 months is gone. So we actually found very quickly that we needed help, that we needed, again, like in real estate, what you do, like you leverage other people's money, you leverage other people's experience, right? So we decided to hire a property manager. And thankfully, because of that, we were also introduced to off-market properties in that moment. So we started doing more investigation, we started doing networking, and again, like, yeah, we started like meeting wholesalers and other intermediaries that would bring us these properties at a discount price. Of course, with the BRRRR method, right? Like, because some of these properties are in distress, right? Like, it's either the situation of the seller that is in distress or the situation of the property that is in distress. And for some reason, this cannot be financed by the bank, or it cannot wait for a month and a half or 2 months to close, right? So we start doing that. And I mean, we really enjoy actually working together with other professionals. You can understand, like with the contractors, with the property manager, with the lender, with the person at the title company. And at the same time, we felt really good in the sense that we felt that we were helping to some degree the economy, to move the economy, but also to provide some affordable and safe housing for some people who were hardworking people and who needed like a place to live. So we started doing that, and we really enjoyed that. Like, actually, that at the beginning, and actually, like, my property manager is a very good friend of mine, and I really appreciate him, and we work together and we've grown together. The thing is that at some point, single family houses is very difficult to scale, right? Like, and at some point also it becomes like a second job, even with a property manager. I mean, as much as we really enjoy talking, we spend like a lot of time together, like, and talking about, like, different problems that happens on the day to day with when you have a good number of properties, right? Like, and then like at the end of the year, also you find yourself with dealing with taxes, with insurance, with mortgages, and all of that. And another important point is that when you are the sole owner and the sole manager of all these properties, all the decisions, all the responsibilities, and also especially liabilities are only on you. So it's in that moment, like, again, about like a year and a half ago, when we decided to again do more education and start exploring other venues. And that's when we discover commercial real estate in the form of syndications, right? Like, but that to that point, I mean, like, it also, I mean, we didn't have an idea that we could go with other investors together and buy like these big apartment complexes, millions of dollars together. But yeah, so we did our research, education, and then we transitioned there.
Got it. You're doing a lot of this learning and networking, kind of in the middle of COVID. I mean, so what was it fair to say that a lot of this networking and education you got was done, virtually, or did you meet a lot of people in person?
Yes, initially it was virtually. Most of that, there was some challenges at some point, because you can imagine, like, when you also buy off-market properties, you need to go and see the properties yourself, and you don't have that much time to take a decision. So it was a challenge. I mean, like, I'm in the medical field. I try to take like all the precautionary measures, like, to get there. And then when I was vaccinated already, it was easier, of course.
That makes sense. And then you mentioned that, and we always think that property managers are like one of the biggest key players. You need to have a really good one if you're trying to grow this business. Were you already friends with this property manager that you had mentioned? Because you mentioned that you're good friends, or did you guys become close friends just because you met through business?
We became really good friends. Yeah, it's one of the great things that I'm very grateful about, like real estate, that has brought relationships and friendships that I couldn't have imagined that I would develop, like, if I wouldn't have done that, right? Like, so we were growing together. Actually, at some point, he was my project manager in the houses that I was doing the renovations. And it's pretty much the same concept. You leverage money, you leverage people. I mean, you need to trust other people in order for your business to grow. Right.
How did you find him initially? I'm just kidding.
So I was asking around, like, looking for Google and recommendations and all of that. I actually was about to work with 3 different property managers at some point, and I penciled down, like, until I found out that I was working way better with him. But again, like, a lot of conversations, a lot of referrals, and talking with people who had worked with him.
Yep. Like I was saying, it's just, you got to do a lot of networking. This really is a team sport, and I love it. You get to leverage people's experience, they know something that you may not know. You're leveraging their knowledge and, other people's, it all comes together, and I love that about real estate. I wanted to ask you, like, the multifamily deals that you're doing, what areas are you going for when you're looking at multifamilies? Is there certain geographic locations? And then I also want to know what metrics you're looking at when you pick those locations.
Yeah, so we're mainly in the Midwest and also in the Southeast area. So mainly looking at what we call like landlord-friendly states, right? Like, and we have seen that during the pandemic, there had been like a movement of population to some of these states. Mm-hmm. So we partner up with other experienced operators because you understand, like we have 1.5 years in this field, so we need to rely on other operators who have been around longer than us, and also operators who are doing this full time, right? Like doing like underwriting or looking for properties. It's a very, very hard job, and many of these people who are doing this are doing this full time. So we need to rely on their experience, and so that's where we go, right? Like in terms of metrics, as you're saying, like we're looking like about like the migration of population, the types of job, the diversity of jobs, and the prices of the houses, like around like the area that we buy.
Okay, yeah, that makes sense. I know you're a general partner. I wanted to ask you, were you a limited partner? Did you invest passively as an LP before you became a general partner and other syndications?
We do both, actually. We do both. So we're general and we're limited partner in most of the projects that we go. Right. Like, so, and also it adds another layer of certainty for our investors that we're going with them. We trust in the project, and we also have a skin in the game. And it's also very good to see how different sponsors and asset managers, how is their communication with their limited partner or with the investors.
Oh, absolutely. The fact of the matter is that you're also raising funds right now. I mean, how has that experience been? Like, what do you like raising funds, or what's that like for you?
Yes. A couple of years ago, I wouldn't imagine doing this, but yeah, it came very naturally, actually. So like we decided to start this journey like in multifamily and mainly being on the capital side of the business. And like initially, I mean, it was very organic. Again, it was mostly with friends, with family, with colleagues, and most of them actually knew that we were doing real estate already for a couple of years, and they knew that we, to some degree, were careful about like the money. We're doing good business. So once we decided to spread the word about that, they were really on board, and we have been very grateful and blessed that, again, like in our first year and a half, we have been able to participate in 4 projects, right? Like, so one of the things that we always start with is like, again, like, and we are big proposals of education, right? Like that's one of the most important things, because like in general, I usually believe like people tend to invest or tend to do things in things that they know or they understand or they're familiar with. So and that's part of the reason why so many people is like only the stock markets or only doing mutual funds or in 401k, and they don't know other things. And when you don't know other things, you're scared, you're nervous about it. You think it's like a scam or something like that. So like I always tell people, go start doing some research, some education, and then we can discuss and moving forward after that.
Yeah, that makes sense. Can you walk me through or describe like a typical deal that you go out, that you would go after, or even describe a deal that you've recently done? Is that something you talk about? Mm-hmm.
Yes, absolutely. Yeah. So like our investment group, like we partner up together, and we usually try to look for properties, again, like over at least 80 units. Okay. Right? Like usually are looking for Class B or Class C, right? Like, which, if anyone is new in this, are like kind of like a little bit like on the older side, but it's still like the population is blue collar, good people trying to work hard and to progress in life, right? Like, and we're looking for these markets that I mentioned before, right? We in general look for value add properties or projects where, again, like you can get what we call like the best of both worlds, cash flow and also appreciation, right? Like so, and our times are the usual, like in the market, like 4 to 6 years, and we try to hit like as I think I mentioned before, 16 to 20% per year. Lately, it's getting more and more difficult because of like all the competition, and again, like people paying like over asking price, and sometimes some underwritings are a little bit scary. But yeah, we try to be conservative, and again, like as I was telling you, most of my active partners, we also invest in our projects. So we really have skin in the game, and so we really want this to work well for us and for our limited partners too.
Okay, got it. What type of financing do you typically do? Are you guys typically doing like, are you doing like 70, 80 LTV financing, or is it, or what are you guys typically doing for leverage?
Yeah, the usual structure is again like 7 to 8% preferred returns. Yeah. Right. Like, and then like after that, we do a 70-30 split. And we in types of finance, because they're mostly value add properties, we use like bridge loans. Got it. And we usually try to refinance at year 3. Got it. And in that point, like we aim to return part of the capital to our investors.
Yeah, that makes sense. And so far, in terms of the deals you have, or how many deals have you currently gone through, out of curiosity? And like, are there any open funds that you're raising money for?
Yes. So we, again, like, are very grateful we were able to participate in 4 projects last year, right? Like in different states, actually. One was in Kansas City, one was in Warner Robins, which is 2 hours from Atlanta, one in Waco here in Texas, 1.5 hours from home, and one in Jacksonville. We currently are looking actively for projects. We mostly are doing 506B, so because of that, we're not able to disclose openly about our projects, so we're very close in general to get into another project very soon.
Wanted to also ask you, it's like, I just more so deals with I'm curious how you balance out your time. I mean, you're a dad, your wife are are doctors. I mean, you're a runner. I mean, what don't you do? I mean, I don't even know what you don't do. Like, how do you balance it all? I mean, do you have what's your team like? Do you have virtual assistants, or what do you how do you do it all?
Yes, it is hard, right?
I don't even know how you have time to talk to me right now.
Because all the things we do here, I mean, actually, I was on call last night, so it's interesting. But yeah, so I mean, I always think when there's a will, there's a way to do things, right? And as long as you're doing and is fulfilling you, and you feel still excited about things, you continue doing it. And we are very passionate about real estate, and we still love medicine. So I mean, contrary to some other professionals that they just want to quit their job and just do real estate. No, that's not the case with us. And actually, we found out that some physicians who are real estate investors, active investors, they feel about the same. They want to some degree continue being physicians, or maybe just not working that many hours, or many not working, like, for example, myself, doing nights or weekends or holidays, just being able to control your time and spend more time with your family. Right. So that's one of the things. And to finish your question also, yes, that's very important to ask for help for other people. And since I think after 1 or 2 months, when I start working with my property manager, I also start working with a virtual BA, who helps me. Initially, she was helping me to try to get more off-market properties, but I finally decided it was too much already on my plate. So she just helps me now, with the management of all the paperwork, of all the documentation that we need to do for the end of the year. And yeah, my wife also, she has been instrumental. I mean, we're partners in life. We're friends, and we have two beautiful children that are the most important thing for us. She just recently actually scaled down her time in clinical practice, and actually now she's taking a break from medicine to focus a little bit more on our kids. During the pandemic, it was, you can imagine, very, very, very difficult to try to balance all of that and have especially what is more important for us, our kids. But now we're focusing more on that. And again, like since the last couple of months that she's not working and focusing on the kids, things are even better.
Yeah. Is your wife also actively involved in doing, in all this syndication stuff and all the multifamily stuff you've got going on just as much as you are?
She has been instrumental, like in terms of like her support, but not until recently. She actually recently started like going a little bit more into real estate. So because of what you probably have heard about, like the real estate professional status, right? Like, so I cannot do that because I have a full-time job. I have a W-2, which would make it impossible like to get it. But in her case, she can do it. And if she can do it, that's going to impact greatly my taxes at the end of the year, not just like the passive income, but also like the active and my W-2.
There you go. It's more so about what you keep versus what you make. You know what I mean? So it's just like, it's really smart. And it's just, I love the fact that, it's like you're the first physician and whatnot I brought on as a guest, but I do know a lot of medical professionals and whatnot that, invest in real estate, and they do it for a lot of times, even for just, I meet medical professionals saying that they first got into real estate investing just for the tax benefits.
Yes.
They could use the cost segregation and the losses out over there to offset their W-2 income. So it's just been really amazing just talking to everybody does it for different reasons, but real estate is just a great vehicle.
Absolutely.
So I'm actually going to go back to talking about VAs again. It's just like, I have VAs as well. It's just like, how did you find your VA and where they based out of curiosity?
Yes. I mean, I almost a part of a couple of Facebook groups for real estate investors, even like from landlords to wholesalers, even. So I learned very quickly how they're able like to leverage other people's expertise, right? Like, so my VA, I mean, I've worked with her already for 2 years. Nice. She's actually also in medical school in the Philippines. So she sent us talk. Yeah, she sent us talks with me like about medicine and yeah, she's also planning to hopefully come to the US at some point. Yeah, so I found her in one of the websites for VAs, right? Like Upwork and Fiverr. Also through a lot of screening. I mean, I don't remember how many VAs I went through, like to get to her, but yeah.
That's
worked with her for 2 years.
I myself have 2 full-time virtual assistants also in the Philippines, and it's been great. It's just the fact that you could, arbitrage the cost of labor overseas, and it just makes sense, and they could do it for a lot cheaper, and sometimes just as well as somebody here locally. Yes. So that's been amazing. So I wanted to also ask you, what do you see next for your business? Like any other big plans for this year, or even just down the line for what you're trying to do?
Yes. So we have been around like in commercial real estate for 1.5 years. We're very grateful about that. We're to some degree success that we have last year, and this year our goals are bigger, right? Like, so this year we're betting more on education. We're releasing blogs almost every week. I'm big in YouTube education. Also, almost every week we're releasing an educational video about like syndications and real estate passive investing, and I'm trying to get out there, and again to spread information or the word about other ways to invest passively. So we, in general, are planning also to bring to our investors at least 3 to 4 projects a year, and the reason why we're not going a higher number is because, like as I mentioned before, we're also planning to invest passively in all these projects that we're bringing to our investors. So because of that, we're very excited, like to be on both sides, on the active and the passive side of investing.
Okay, got it. I'm going to ask you this as well. Like, what has been your biggest mistake in real estate investing so far, and what have you learned from it?
Yes, and if you ask anyone who's in real estate and in syndication, especially when you ask if you have had any problems, if for any reason that person answers no, is either of he's lying or he hasn't been long enough, right? Right.
Good points.
We have had Problems in general, like again, like in residential real estate and also in commercial, I'm more lean on my experienced partners that again, like at some point they had problems with the property manager and also with the asset manager, and that's something very important that now that I'm more experienced in this field, when I'm gonna go and work with a team. One of the things is that I look that they're doing this full time, and also I look that the asset manager is a dedicated asset manager, like that works directly with the property management company. Because again, like it's very exciting to raise money, to look for a hunt for the deal and all of that. But the most important part is after you close, right? Like a good property and asset manager can do great or really bad things. So so that's very important for us.
Okay, no, that's cool. And then what's your overall take? What's your outlook on the multifamily space, just even in the next 5 to 10 years from now?
Yeah, so it's intriguing to some degree. We have seen like prices to skyrocket just in the last 2 years. There's a lot of influx of money in the market. So, and because of that reason, people are still paying a lot, which makes some of the projects that are out there in the market, like to some degree risky to invest. But we still feel like the fundamentals of investing passively in apartment complexes are out there, are really good. Still, we have like a lot of deficits in housing in the US. Mm-hmm. And this, unfortunately, is not going to change in the next 2 or 5 years. I cannot tell you about 10 years, that's a little bit far down the road, but like at least I don't think these fundamentals are going to change anytime soon.
Yeah. In terms of advice for folks that may be newer to the journey of real estate investing, what do you think an investor should know, or what advice would you give to a new investor starting their journey, or what resources should they tap into, etc.?
Yeah. So one of the things is that, and this is another thing that many investors in real estate say, like, I wish I would have started earlier, right? So that's one of the things, like the earlier, the better. The second thing is education. Education is, I cannot stress that, is fundamental. Go on there and just like be like as a sponge and get education. I mean, and there's so much out there, really, right? Like there's conferences, there's meetups, there's even audiobooks if you're driving every day or you're not able like to read that much. I mean, actually, that's how I do like most of my education, with audiobooks and podcasts like yours, for example. Mm-hmm. I mean, like, so that helps a lot. But there's a point where education can take you to just some place, right? Like then after some time, you need to take action. Education and knowledge is important, but without action, it doesn't take you anywhere. So that's one of the most important pieces of advice that I would give to someone who wants to start in real estate.
Absolutely. I know I encounter a lot of people that just are there for the education, and they're still like for years, and they never take action. It's just like, you guys, and everybody also needs to take the action part. You know, you know what I mean? You know, just jump right in, you know, after you kind of get a sense of like what you're doing, and then you just keep networking with more people and follow people that have already done what you're wanting to do. You know, I wanted to also ask you, what has investing in real estate, how has it impacted your life?
Yes. So I think I mentioned this at the beginning. So we now have other income streams added to our W-2s. So that has been very important in terms of our security, right? Like, so that's very important. We still haven't replaced our income, because you can understand, as physicians, you are high income earners. The more you make, the more difficult and the longer it takes to replace your income. So that's one of the things. But fortunately, we have a clear path for that, so that which we expect to reach that in the next 2 or 3 years. And the second thing is in terms of mindset, right? Like we now see the future with hope, right? Like in the past, like, you're a physician, you need to keep working, and you don't see a really clear path to get out, right? Like, and I have talked with some physicians and friends of mine that have talked with their mentors, and they ask them, like, would you change anything, like when you're retiring at age 60 or 70? And what they said is, I would have spent more time with my family and do more things that I love. So was very impactful for me, and that's the reason I'm doing this.
I love it because it's also given you more of that, like freedom in your mind, that you have that you can do other things and whatnot too. It's just, it's amazing.
Yes.
Are there any big goals that you're working on, even just this year, personal or business?
Yeah. So again, we're very grateful for what we have and what we have accomplished. And I'm not sure if I would like to mention this book, which is called The Gap and the Gain by Dan Sullivan and Ben Hardy, about how entrepreneurs see success, right? It starts from a point of gratitude and being grateful for what you have accomplished and what you have in life. So we start from that point actually, and we're very happy. And something important also in the personal side that happened to me is that as in my bio, I mentioned that I like to run. So last year I ran a half marathon after 10 years. and now my bigger goal this year in the personal side, with my family, is I'm running another half marathon in a month. And then hopefully before the end of the year when I run a full marathon. So we'll see. I'm not sure if I'm going to be able to make it, but at least I'm going to try.
Is there anything that I should be asking you that I didn't ask you yet?
No, man. No, I really thank you for this interview. And I'm very grateful, and I really had a good time.
Yeah, it's another question I always like to ask towards the end is what does success? What does success mean to you? And it can mean different things. It means different things.
Yes.
What does it mean to you?
Success to me, is just to be good with my family, with my wife, with my kids, to wake up in the morning and see that they are there with me and that they're healthy. All the rest, to be honest with you, it doesn't matter that much. Of course, they affect our life, right? Our profession, our business, and all of that. But what matters the most is your family and with whom you spend your life.
Okay, God. And lastly, how can somebody get a hold of you?
Yes, thank you. So we have our website, and our company, as we mentioned, is syndications in apartment complexes. It's called Nima Equity. Nima is Nancy, N as in Nancy, IMA equity.com. And we also have our YouTube channel about education and investing passively in real estate. And I'm going to give you the link so you can share that also with your audience.
Absolutely. And I'll stick that in the show notes. And I want to just talk about YouTube really quick. Are you meeting people YouTube organically or whatnot as well? Has YouTube been really good for just you connecting with folks that haven't met you yet? Mm-hmm.
Yeah, so we took the decision to go into YouTube just recently again, actually three months ago. So it's starting, it's a working process, and it's starting to grow. We're getting some traction, we're getting some views, so we're good about that, and we're feeling very good about it.
Amazing. Well, that's a wrap, folks. That's all the time we have for today. Thanks, Harry, for joining me on this episode. I loved everything you talked about. It's just you have a really good balance, which is you really focus on the family, and I love that fact that you're able to just manage it all. You're very committed to growing this real estate business, and yet you're still also committed to medicine. It's your story is very inspirational. So my listeners, feel free to reach out to Harry if you have any questions for him. So thank you for checking out this episode of the School of Cash Flow. And remember to leave podcast a review on iTunes, as it helps me attract more great guests just like Harry. So until next time, live life abundantly.
Thanks for listening to another episode of the School of Cash Flow. We hope you enjoyed our deep dive into all the tips and tricks you can use to help you on your passive investing journey. In the meantime, you may visit www.cashflowschoolpodcast.com for more great episodes. Don't forget to subscribe, rate, review, and share. That's all for this episode, folks. See you next time.